if you're working in the fund industry, there is something you need to know about the structure of the funds. These are the open-ended and the closed-ended funds. Let's have a conceptual overview and understand how funds are structured. I'm your learning partner, Sushila, and let's deep dive into this topic of open-ended funds. If you're a mutual fund investor, you'll understand the concept of an open-ended fund being that which allows subscriptions on a continued basis. So these funds accept inflows into the funds on a continuous basis from different investors. So subscriptions mean when an investor puts in capital into the fund. That is called as a subscription from the investor. That means that there is an inflow into the fund, and this can be done on a daily basis. But the redemptions also can be done on a daily basis. Okay, so when an investor wants to withdraw from the fund, that also takes place on a regular basis, on a continuous basis, as per the regulatory requirements of the land in which the mutual fund or the hedge fund is registered. So inflows into the fund and outflows from the fund take place on a continuous basis, and therefore one of the most important performance attributes, that's the AUM, the assets under management, also changes on a regular basis. The AUM, the assets under management of funds, because they change every day due to this continuous inflow and outflow, is a very powerful performance attribute in the case of hedge funds. If the inflows exceed the outflows, the assets under management, the AUM, increases as investors have a greater confidence in the fund. There is a bullish environment in the markets, and investors prefer to invest in this particular fund, and hence subscriptions into the fund is higher than the redemptions from the fund. At what rate do the investors enter into the fund or exit from the fund is the second performance attribute, and that is the NAV, the net asset value. The NAV of the fund changes on a daily basis because of the market fluctuations. The NAV is the per unit value of the fund. And if you're taking up a job in a fund industry, it's very important to know what are the factors that go into the fund calculation of the NAV. The NAV is, if you want to put money into the fund, the numerator is the capital invested by the investor, and the denominator is NAV plus the entry load. So funds charge money to enter into the AUM. Thus we get the units allotted. The investor is thus allotted the units. For example, if the capital that the investor puts into the fund is $100,000, the NAV on a particular date is $20, the entry load given to us is 5%. So the employee has to calculate, or the executive calculates, what is the entry price. The entry price or the purchase price is the NAV multiplied by 1.05. That is your entry load. The entry load is the charge that is charged to the investors for entering into the fund. So $100,000, that's the numerator, divided by NAV plus the entry loads, that's the purchase price. You get an allotment of this many number of units. I've already calculated that for you. If you want, you can cross-check the calculations and let me know if it's right. On the same day, another investor wants to redeem the units, okay? This other investor wants to take out the funds, take out his capital from the fund, and therefore what would be the rate at which the investor redeems the funds? The NAV is $20, remains the same because it's on the same day, and in this hypothetical situation both entry load and exit load are charged at the same rate. Normally it's not that way. So let's calculate first the redemption price. Okay, so $20, the exit load is 5%. What is the price at which the investor can redeem the units? That is the case of $20 multiplied by 1.05. Let me know the answer in the comments section below. A close-ended fund, on the other hand, does not accept subscriptions and redemptions on a continuous basis. The close-ended funds accept subscriptions during the NF4 when the fund is launched from the different investors. These subscriptions come also after periodic intervals of time. So this money that is calculated during the NF4 as well as during the pre-announced intervals, these are the only points of time at which the inflows into the fund increase other than corporate actions from the fund itself. Okay, so the AUM of the fund does not change on a regular basis. So how does the investor exit the fund if they want to exit the fund? Normally there will be a lock-in period for the closed-ended fund. But if you look at some of the top hedge funds in the world, including Blackstone as well as Citadel, etc., the fund gets listed on the stock exchange. So the fund is listed on the stock exchange, and investors who have got units of the fund can then exit by selling the units in the stock exchange. What do you think the market price will be? The market price of the fund, which is listed on the stock exchange, will be as close as possible. In fact, almost identical to the NAV. So in either case of an open-ended fund or a closed-ended fund, NAV will be calculated on a daily basis, if not announced on a daily basis. Thanks for watching.